We've just heard from the Bank of England just now, Jane, with a rather extraordinary statement saying that they are planning a gilt market operation, which is an intervention from the Bank of England, they say, to try to restore orderly market conditions. Let me just read out part of this statement, literally just in the last few minutes from the Bank of England. They say, as the Governor said in a statement on Monday, the bank is monitoring developments in financial markets very closely in light of the significant repricing of UK and global financial assets. The repricing has become more significant in the past day and is particularly affecting long-dated UK government debt. Now, what they're talking about there is essentially part of the thing we've been talking about recently, the yields on government debt, which have spiked up to the highest rate that we've seen since the financial crisis. The statement goes on, were dysfunction in this market to continue or worsen, there would be a material risk to UK financial stability. This would lead to an unwarranted tightening of financial conditions and a reduction in the flow of credit to the real economy. So essentially saying that this could, well, we're already seeing it, aren't we? You were just talking to Ian about this, the fact that mortgage lenders are pulling some of their products because of what's happening right now. In line with its financial stability operations, so the bank has two roles here. They have a role of dealing with what's going on in the monetary side, that's interest rates, and financial stability as well. So making sure the market can function. The bank stands ready to restore market functioning and reduce any risks from contagion to credit conditions for UK businesses and households. This is the key bit. Sorry, I'm reading this out because we have literally just got it. To achieve this, the bank will carry out temporary purchases of long-dated UK government bonds from the 28th of September. So that's what they are planning to do. Obviously, that's from today. The purpose of these purchases will be to restore orderly market conditions. The purchases will be carried out on whatever scale is necessary to affect this outcome. On whatever scale is necessary to affect this outcome. The operation will be fully indemnified by HM Treasury. So it's been coordinated with the Treasury. I could go on, but that's the main part of this statement. This is not quite similar to quantitative easing. That's one of the things that many of you might have thought when you heard about the government kind of going in and buying government debt, because it's not to fulfil a monetary objective. It's to try to calm those markets down and get them functioning properly. This is the bank intervening to try to get the markets working again, and intervening on quite a novel basis. I don't recall seeing anything quite like this during the financial crisis. And it's specifically looking at the government bond market. The idea is that, they can see what's happening right now, as we can. They are worried about it. And where we got their statement on Monday, this is going further than the statement. This is actually intervening and obviously follows the IMF's announcement yesterday of their concern. So we've just had that through
just explain, sorry to cut across you, Ed, but just explain to us what the bank will carry out temporary purchases of long-dated government bonds. In layman's terms, what does that mean?
It means they are going, so long-dated government bonds, that is basically those, it's government debt. It's government debt that the government issues to try to finance itself. And the bank has two roles. It has a role of just making sure that interest rates are kind of working and getting out there into the economy, but it also has another role to make sure that all of the markets, and that includes these government bond markets, includes other markets as well, seem to be functioning properly. And what they do is they monitor that to make sure that there are no disturbances and to make sure that money is able to get out there to people who need it. And that's their verdict on that latter part, the financial stability part, that they need to step in to make sure these markets are functioning.